Alright, guys, so let's talk about Japan today. A lot has been happening since Takaichi took office. Now, I thought she would lead a more independent policy, but it seems she went out to annoy China. We hope for the best, but it seems things just get messier. By now, we know the future is highly inflationary, and I don't care what Besson is saying about all the price curves bending down. Trump is preparing his $2,000 stimulus checks. US deficits are nearly 2 trillion a year. China is going to flood the economy with money to fight the trade war. And then with the Fed also going to lower interest rates. The last thing we need is more money printing. Well, it seems Japan is now joining in. And for the size of their economy, it's very big. We are now at a Japanese breaking point. Japan's finance minister has confirmed the stimulus package is going to exceed 17 trillion yen. That's $110 billion, which is a ton of money. As we predicted on this channel, Japan has chosen the route of inflation. Now, when the whole world is spending money in this tariff war, you have to go all in as well. You need to shove all your chips into the pot, or you'll eventually lose everything over time. But there are consequences. When you decide to print over $100 billion, you wreck your currency. You also smash your bond market because of increased debt issuance. You piss off every investor out there. Japan's 20-year yield is erupting towards 2.8%. This is the highest level in history. Confidence in the yen is gone, and there's no illusion that Japan's debt to GDP, which is over 230%, will ever be sustainable. Now, the stimulus is supposed to be spent on cushioning the cost of living. Quite ironic, it will also go towards boosting investment in AI and semiconductors. However, the bond market is telling us the truth. Investors just don't believe it will lead to better growth. The issue is the landscape in which Japan is competing in. Exports to the US are being hammered down by tariffs. China is eating their lunch when it comes to industries. The decline is truly structural. Japan's GDP crashed by 1.8% in Q3. It's the first decline in 6 quarters, which tells us the effect of the tariffs are starting to catch up. Should this happen again in Q4, Japan would enter an official recession. The problem here is how the perfect storm is starting to hit their economy. And yes, a lot has to do with China confronting Tokyo. This all revolves around the Taiwan issue. I have no idea why Japan would even want to hint military action of any sort. But to the Chinese, this is a definite red line. There are still big historical tensions as well. Just think back to World War II. Even the US has a clear one China policy. It's bizarre seeing Chi make her comments. But there are consequences, and that puts the entire system in Japan at risk. We have state media in China hinting that Beijing has made preparations for retaliation. And this might even include sanctions or restricting trade. Obviously, this would be devastating for Japan. Major heavy industries are already in crisis. US tariffs are hammering down exports. The yen is still down against the dollar, so imports are also more expensive. The one sector that should be insulated from this mess is tourism. People visiting Tokyo, Kyoto, or Mount Fuji, Sapporo. In fact, tourism is around 7% of the entire Japanese economy. And this is where things get dicey. China is warning their people about traveling to Japan. And boy, do they have enormous leverage here. The biggest source of visitors to Japan comes from China. From January to September, there were 7.5 million mainland visitors. You throw in Hong Kong, you have 9.3 million heading to Japan. That's the majority of visitors, more than South Korea and the US put together. So yes, China has big leverage here. Even cosmetic companies like Shiseido crashed in price. They're down 9% on Monday. That shows us the enormous leverage Chinese consumers have. They are the big spenders, especially for Asian economies. In addition to that, Beijing could always impose tariffs on Japanese goods. A boycott might happen on a grassroots level as well. So things can seriously spiral out of control. Just like the US, Japan depends a lot on Chinese rare earths as well. Part of the stimulus is to channel money to build up their semiconductor industry. Japanese automakers also need critical minerals from China. And that's why picking a fight with Beijing isn't the smartest idea. The timing is just horrible. China is the leading producer of essential industrial minerals, nearly 100% in gallium and magnesium, graphite and rare earths. All EV materials are controlled by Beijing. If you need to build magnets and produce chips, you need minerals like indium. China controls 70% of that market there as well. Isn't it smarter to make friends with them instead of trying to test them? This is what I don't understand. Now, sure, Japan's 110 billion stimulus is a lot of money, but it is not infinite. It will ultimately boil down to affordable inputs and accessible markets. And China holds the cards for both these variables. Now, speaking of inputs, Trump's reindustrialization of the US is on the brink of collapse. I'm not saying that it won't possibly work, but it will cost much more than what everyone thinks. The tariffs, which are driving revenue to the federal government, are destroying the very industries Trump wants to save. And if you think building those data centers, chip plants, or electric cars will be affordable, it's time to think again. The world's biggest aluminum producer is imposing huge markups on their shipments to the US. The Midwest premium has gone ballistic, an extra $2,000 on top of the raw metal price. To no one's surprise, they are calling the US market all but broken. Stockpiles are shrinking and prices are jumping. And does this look like the promised land of manufacturing? Almost immediately, manufacturing anything in the US, like an EV, will cost a ton more. So US consumers are going to be hammered. All the tariffs will force them to buy American, which means paying a big premium in this case. Secondly, US industrial exports will be globally uncompetitive. Good luck trying to compete with China in key sectors. It's so crazy that manufacturing anywhere else is much cheaper. Setting up an industrial plant in the US is like entering a casino without any exits. You eventually get bled dry. Global aluminum supply are avoiding the US like the plague. Canada, for example, is shifting a lot of volumes to Europe, and that's keeping a lead on prices there. But for the US, prices are almost double. How is that sustainable? China has their own chip supply, so the US is effectively isolated. To get their supply, US companies will have to pay a whole lot more. This isn't just restricted to aluminum. Steel and copper imports are also taxed at over 30%. What is the US trying to do over the next decade? They are desperately trying to win the AI race, and that means over $1 trillion in spending. But all this will be done at a premium. The inputs coming in are being taxed by Trump's own tariffs. And can the US really afford the extra expense? There's a huge infrastructure funding gap in the US that's over $3.7 trillion. This includes 580 billion for energy, 690 billion for roads, and 370 billion for bridges. You can't have an effective industrial economy without basic infrastructure, which means more borrowing and even more spending to fill up the black hole. I'll make it very simple here. The US is now caught in a trap. They will have to spend $2 to get $1 worth of output. Now, welcome to Hotel California. Once you check in, it's game over. You can't check out. And guess what, folks? This crazy train isn't stopping just yet. And if you think the US can't afford that, Trump begs to differ because helicopter money is coming. The tariff dividend is confirmed for 2026. Now, according to the king of the world, Americans will be receiving their $2,000 dividend check very soon. This payout will hit mailboxes by mid 2026. This is insane. Now, most definitely, this is going to be inflationary, at least in the short term. People will rush out to cash them and they will rush out to spend them. You can't really blame them here. Who knows if you'll get another check or not? But the way Besson justifies this makes it sound like another tax on the middle class. It's bizarre and really obscures the truth here.
The president's talking about a $2,000 rebate, and that would be for families making less than, say,
Okay.
$100,000. What we did with the tax bill is actually financing the president's no tax on tips over time. So Security and the big refunds you're going to see are a result of that. So that's another payment to the American people.
Now, let me give you my take. This stimulus check is basically giving you a turkey wing or chicken wing today, but Trump will take the entire chicken away tomorrow through 3 more years of tariffs at the very least. And for those earning more than 100 grand, well, you are out of luck, which is strange because these are the people who probably pay more in tariffs. But perhaps here's why Trump can't give any more. Just this move alone will cost the administration roughly $300 billion. That's additional borrowing on top of the existing debt mountain. The CFRB estimates this to hit $600 billion, even more. It's more than the tariffs collected so far, which means this is probably a one time event. This is not a windfall, and the biggest winners will still be the rich. They are the ones controlling the production of everything. The stimulus is seriously unnecessary. This will still require congressional approval, but chances are it will get passed. I don't think any politician will risk re election by denying money to the people. That's over 100 million votes at risk, so I bet the money will get passed. And let's sit back and think about the stimulus money. Where will the $2,000 hit to? The 600 billion in excess spending will flow to the people at the top. The profits will be used to buy up all sorts of assets. Doesn't matter anymore. Doesn't matter if it's real estate, gold, or US stocks. We are in an asset melt-up triggered by the Trump administration. It's bread and circus for the masses and a new house for the upper echelons. Here's another problem with the stimulus, guys. It will influence the Fed rate cut decision. Now, if Trump is going to inject the economy with $600 billion, this sounds like a new wave of inflation, doesn't it? So, Powell and friends are trapped. If they cut now, they might feed into an even bigger surge in prices down the road. The odds of no cut have now surged to 53%. The market is worried about inflation, and with the data blackout from the shutdown, now the Federal Reserve is trapped. The margin for error here is extremely thin. If the Fed decides not to cut interest rates when markets are so hyped up, I think we better prepare for a nasty correction. The stock market bubble, especially big tech, needs interest rates cuts. That is undisputable now. Tech bros, they need to borrow a ton of money. But does the Fed have the courage to cut when Trump is going crazy with his stimulus? Cutting rates when a tsunami of $600 billion that hits months later? Are you kidding? And this is why the economy is officially a joke. It's a comedy show. You have contradictions stacked on top of nonsense, stacked on top of insanity. It's crazy. It's fascinating that this sandwich from hell hasn't imploded just yet. But the cookie will crumble eventually. You cannot keep this shell game going on forever. But let me know what you think. Can Japan's economy survive their own mess? And can US industries survive Trump's tariff war? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.